Good day, everybody. Brian here from quantlabs.net. I'm going to show you the top performers after today's credit worthiness cut for the US. The markets have not been looking too good. So let me pull up the worldwide analysis overall for the entire market globally. So Fitch has cut the debt of creditworthiness of the U.S. So as you can imagine, everything's gone completely red, with the few exceptions that you can see here. Oil and Bitcoin, well, was positive earlier, and so on. So everything's major's gone red. So pretty negative catalyst. So what I want to show you is a post I just put up on my private for all my members, but I'm probably going to move this over uh, to my Substack eventually, the way Substack has been performing. But nonetheless, if you do subscribe to my Substack, this is one of the analysis you'd get. So these are all of the available Forex pairs along with CFDs. Now, in my case, I wouldn't recommend trading on any of these Forex brokers. Let's say this one's right from Oanda. They have market making trading desks that try to go against you. Just something I wouldn't recommend. If you are going to trade some of the major pairs, you may want to look um, at interactive brokers. But if you have to, be very careful which forex broker you choose. Just to put that as a caveat. Anyways, let me show you what we have here. I'm going to pull up my trading view here as well. So you can see here, I've segregated this out via two things. Yes, to watch. So we only have five pairs here. One, two, three, four instruments, and then the rest are what I consider maybe based upon trend. So we'll go through these each, and I'll explain why it's confirmed and why it's not. I just rank it as a maybe. So the first one here we have is, and again, these are all from Oanda. So if you look up USD Denmark, um, the Danish krone. So let me pull up the um, super chart here. So what will happen is you can see it's kind of been moving in a trend. That's on a 4 hour basis. It's what I use on my MotorWave, where I get this information from. And these are daily scans. So in here, you can see there's some form of trend here with the USD Denmark. Usually, what I've been watching for the last few years doing this, when things go bad, usually currency is a pretty good place to be. In this case, the Scandinavian ones can be pretty good with the USD against Sweden, USD against Denmark, or USD against Norway. In this case, you can see it's Norway. So this took place since July, and it's kind of trended up. And it's not an okay defense trade. These change all the time, but this is the current state of where we're at. So this is the USD Denmark. The next one we have here is the gold New Zealand dollar. It's now a CFD. Again, I would not ever trade a CFD, but the data's kind of not bad. It's pretty accurate, in fact, actually. So if you look at gold in New Zealand dollars, you can see here it's trended up, and that has been fairly sustainable. Okay, so let me just get rid of this indicator. Now I showed this on a prior webinar or stream I put up on on TradingView about 2 weeks ago. I want to just show you a comparison here when it comes to gold. What you trade in gold matters. So if you're trading gold in US dollar, I'm going to put up three comparisons here. So we have here gold in New Zealand. Okay, that's fine. Let me show you gold in US dollar just to show you the comparison returns. So you could see here gold in US dollars giving you 1% roughly extra, or maybe 0.5% extra when it comes to in US dollar, which is irrelevant, right? But this is what matters here. Okay, so if you want to really get the ultimate return in in a gold, so you got gold, and then you choose the Turkish lira. Check it out. Boom! Look at the difference there. You got 5% difference, and this is on a 4-hour chart. So you got 5% return versus 2% return. Okay, so if I now go on a 5-day, you can see that New Zealand's actually giving you a better return rate, but that doesn't really matter. So if you go on the 1 month, let me just you're looking at 4.5% for gold in Turkish lira, so it's almost 3-4 times versus gold in New Zealand or US dollar. 3 month. Look at the difference now. Now you see the longer you hold gold in Turkish lira, you're up 32%, 33% versus the other two, which are both negative. This is what your gold move should look like naturally, without the Western control. So if you want to get real natural moves, raw moves of how gold should move, trade in Turkish lira, because the Turkish lira is declining, and you'll be able to almost 10 time return gold in Turkish lira. How about them apples? So if you go year to date, get a difference. You're up pretty well 5 times. But again, this is what matters. As I said earlier, if you held gold in US dollar, you're only getting 5% return year to date. If you held that now gold in New Zealand dollars, you'd be doubling it. Now, if you took gold in Turkish lira, you would get 5 times return. Sorry, 10 time return against the US dollar. So any person that's telling you to buy gold, sure, believe them, but you want to hold it in Turkish lira for now and watch this every day. It's just one of those secrets that I'm able to watch. You want to hold gold, get the ultimate return, hold it in Turkish lira. End of story. Okay, coming back to our list here. Um, and again, that comes back to what I said earlier. If I take out US gold in Turkish lira, year to date, you'd be doubling your money if you held gold in New Zealand dollar versus gold in US dollar, right? All right, so let's take a look at something new. Just want to get rid of that. And that's what I have as part of this membership subscription to my Quant Stack. Sorry, my Substack. For $47 a month to know these sort of things, it's a steal. It's an absolute steal. What I just showed you right now. You're going to pay back your whole year's worth in just knowing that one trade, buying gold in Turkish lira. And you would have made a lot more money as well. All right, so let's look at the next one, which is Hong Kong dollar and Japanese yen. Now, again, this is during a down market after the U.S. market's been cut. Look at the year to date. I believe this is year to date. 1620 up to 1820. Not a bad buy and hold there. Usually, what I'm finding is if you look at, in this case, Hong Kong and Japanese yen, another pair that might do okay, but you're not seeing it, is the Australian New Zealand trade. Let me just do that as a comparison as well. So all the stuff that I'm showing you to get decent returns, so it's not as much. You can see there 10%, 11% versus 0.66%. How's the Euro USD been comparing? So this is obviously one of the better ones. Euro Japanese yen. I'm sorry, Euro, let's say Euro USD. Oanda. So you can see there, Hong Kong Japanese yen would give you 10%, maybe 10 times return, just holding that one pair. So this is important to know. This is why I do this type of analysis. And you don't have to do anything hard to get boost your returns immensely, immensely. Now you can see I'm already on TradingView. I'm now preferring this platform over anything else, including coding up your own solution if it's in C++, Python, whatever. Kind of not worth your time to see these type of easy charting capabilities with TradingView. The next one is oh, let me just let me just show you here while we're here. So in here you'll see we've got listed under maybe is the USD Japanese yen. I did put up a trading idea on this. Just as a comparison, let's check this out. Okay, so if I put in USD Japanese yen, okay, you can see here already the Japanese yen's doing very nicely versus the popular pair Euro USD and let's say the Australian New Zealand. I'm going to get rid of that. It's not very helpful. But you can see here Euro USD at 0.66 year to date versus let's say anything in Japanese yen. You're just going to do much, much better. So you're going to get a 3-time return with a Euro USD Japanese yen. This right here and this decline in the yen is due to the capital controls that the Bank of Japan implemented. And look what's happened. It's already recovered. So one big thing I want to highlight here, very important. Remember how last year was bad for all investments? Check out how the Japanese yen has done compared to the Euro USD. So you're down negative 0.5% for all of last 3 years. Meanwhile, Hong Kong Japanese yen 5.5%, and holding USD Japanese yen would give you 5%. Okay, so if I throw in just for fun, let me actually change that to the daily. Yeah. Oh, I'm sorry. Big difference here. So now we've got daily, 3-year view, I believe it is. Yeah. So you'd be down negative 0.5% if you held on to Euro USD for the last 3 years. That's including the down year, which you can see here for all of 20. Well, that's a 3 month. We want, let's say 1 year. So 1 year, yeah, it's not much difference. But even so, this is a 5 year. So you can see here, this is what I want to show you here. So right here, if you held a Japanese yen, you'd have done very, very well. You'd probably up, as far as I could tell here, between February of last year up to the peak of October. You can see right there, you would have made a 33% return just holding Japanese yen. Very low volatile currency, and you would have done very, very, very well just that one simple investment. Better than gold, better than Euro USD. So let me get rid of the Euro USD here. Okay, so if we did that comparison, so we got a weekly view here. So if I did the same thing with gold in US dollar, everyone thinks that gold is the place to be. The cat's meow. Let's see how that's done. So here, actually, gold would have been a better return. Um, so that's not bad actually, but that's a 5-year view. 1 year, not much different. But one thing I can tell you is if you added the DXY, the dollar index, yeah, DXY last year is negative. You can see there. See how the 5-year did. Yeah, so gold still would have been your top better investment, up 60%. So knowing that, that's all fine and good. But let me just show you what would happen if you held euro two positions, if you knew about it. Euro, Turkish lira, That's your number one trade right there. I mean, gold, you've been up. And that's 5 year view. 60% you have been up with gold and US dollar. But look, you would have been up over 400% with the euro and Turkish lira. That's the number one trade I've seen, legitimate trade right now, and that would have been on FXCM. I mean, you can get that pair pretty well on Oanda as well. So there's that. Um, Let me just show you one more. Let's look at gold, XAU, and Turkish lira again. There you go. Gold and Turkish lira, 740% versus you almost doubled your money in euro, gold and lira versus euro in lira. I mean, this is a no-brainer. uh, People don't like to see this, but this is what happens when you start to come across your different trades: Hong Kong dollar and Japanese yen. The amazing thing about this whole uh, thing I'm showing you is that people won't get to this point in the video, and they'll gladly spend $5,000 to learn how to make money. And me, mom, just showed you how to do really well just by holding certain instruments. Blows my mind. All right, so we've got uh, going back to these are the confirmed. So these are all, remember, all very short term. So another one you may not think of in the short term. Let me go back to 1 month. So get rid of whatever that is. Okay, so that right there is Hong Kong Japanese yen. So if I change that to USD check, yeah. So there's not much trend here. I'm not a fan of this at all. 5 day, you can see there's a trend. Or 1 month, you can see the nice trend here to hold when the markets for the last 2 days have been negative. Um, it's okay, I guess. How much did that move? So that's from 21 to 22. Okay, so let's go through the maybes now. Now, these are CFDs again, but these will highlight as well. So now we're going to look at the SPX 500. So when you get an extreme call where a rating agency like Fitch says, U.S. creditworthiness is cut, look what happens. It just drops quite a bit. And it could continue to drop because that may be the catalyst that may really start a decline long term with the stock market. I can't say, but it may reverse tomorrow for all I know. Okay, so there's that. The next one we have here are the different gold in different currencies. So if I was to show you the first one, gold in British pound. So you can see that's why I put it as a maybe. It's been fairly stable in British pound, hasn't declined at all. If it does decline, then that shows you weakness in the currency of that gold and whatever the currency is. So we have there gold. Let me just get rid of this. Boom. Okay. So the next one we have is gold and Japanese yen. So I'm going to bring back, so we have gold and Japanese yen. So this matters. If you want to get maximum return holding gold, your currency does matter. So it's the one I just showed you, gold and British pound. Slight difference there, maybe 0.5%. Long term, it does add up, as I shown earlier. This one I'm not seen before is the Euro Polish zloty. Just go back to my trading view. So I'll get rid of that. So USD uh, PLN Oanda. You can see a little bit of a trend there. You don't see much of this. This is not the best currency to hold, but again, it might be one of those that may perform down the line. But again, it is part of that Russian war story. So you have here now oil. Actually, wrong one. Uh, there we go. So that's USD Poland. But let me pull up Euro Poland. That's what it was meant to be. So yeah, you can see that trend there for just the last few days. So this could be people piling into the Polish currency as a defensive. I've never seen that before. Let's compare that to the what I just showed, the USD Polish. See how that looks. Same thing. Defensive trade. Potentially. Now, the reason I use Oanda and do this process, this is basically the watching the global hot capital flow. Amongst all the different regions and different currencies and different CFDs. It gives you a high level picture of where capital is flowing on a daily basis based upon economic news. So, okay. So the next one we got is oil. This is Brent crude. Um, okay, so back to BCO. Okay, so you can see it's sort of trending up from July 23rd, 64 to $73. Slight decline. Just watch my trading ideas on TradingView to see. I do post almost daily on what's going on with oil. Um, Part of that is just oil cuts, but there might be a low demand on oil now. It's hard to say, but it really depends on China. I got China coming up here in a minute. So there's that. Gold and euro. So you can see it's trending up a little bit, been range bound for since around the 23rd of July. Okay. US Canada is another oil trade. Well, usually it is. USD Canadian oil. You can see that spike there. Again, I don't put that as confirmed because this is not sustainable. This could drop back very quickly. Um, you can see there from July 12th, it's just gone through this valley and it's starting to spike again, but it could come back down. So I don't usually, I like long-term trends with what I showed you with the euro, Turkish lira, the gold, and Turkish lira. Those are very long term trades, like 5 years, if that continues to hold. This next one is an interesting one. This one's the Russell. Uh, so we are, this is the Russell 2000. It's another performer here. Wrong one. Uh, US. Oh, and let's use. So you can see here, that's a 30-minute. We want 1 day. You can see it's starting to trend up there. And there's a reason for that. Did I lose my camera here? No. Okay, it doesn't matter. I'm still recording. Okay, it doesn't matter. Anyways, yeah, you can see that trend there. This is what things I don't like is the this volatile move. There's some worse ones out there. Um, so the next one I want to show you is China. So this is USD China 1, CNH. Okay, you can see it's trending up. What does this mean? That's a weakening of the yuan, but China may be coming back. The currency may be coming back. And I say that because let me pull up a different chart here. Um, yeah, so let me just do a comparison, or actually, I'll do this. CN2, the CN200. Can't remember, it's 200, CN20, CFD doesn't look like I have it here. But I will tell you that the Chinese market, let me see if I could find the Hang Seng index right here. So the Hang Seng has kind of recovered daily chart, but it's starting to decline. Another way to measure, um, oh no, we want the Shanghai. Well, let's see if I got the Shanghai composite. Hmm, no, I don't have the Shanghai, but I did notice that the Chinese market was coming back. But anyway, it doesn't matter. So let me go back to. I'm just going to show you copper here for a minute. SXU USD look like copper. Yeah, XCU USD. So here under. Uh, so usually when you start to see copper XCU USD. Hmm. Don't know why I can't find it. XCU. Anyways, doesn't matter. Anyways, I'll forget copper for now. It might show up here. Doesn't look like it. Anyways, let me show. Okay, so I've shown the Chinese yuan. Let me go into our next one, which is the yen. Okay, so this came up as a trading idea today earlier. This is what you trade when things go bad. I've already shown this before. You can see here it's been doing very well from January 21st here at 103, almost 40%. Oh, that's since 2021. Let me do the year to date. So year to date still 127 to 143. That's probably a 10% move, very low volatile. That's a good trade when things go bad. That's where the wealthy goes. In fact, it's a secret, just so you know. Um, don't ask me why, but it's low volatile. As I said, right here, you saw that the Bank of Japan did their yield control, and it's very close to recovering, and it's still gonna that trend's still gonna continue, even on a 5 year. You can just see it seems to recover no matter what. So this will be a really good safe haven trade if things get bad. USD Japanese yen. The next one we have here is the CHF Swiss franc Japanese yen. Oanda, same thing. But you could see the difference between over 5 years that there's less drawdown with this as a long-term trade. Very nice. 104 to 163 year to date, just solid up. Fewer drawdowns. If you look at the 5 day, you know, usually I use a 4 hour time frame. That big control, yield control, fully recovered, and it's going to continue to move up if that 5 year trend continues. Gold in Australian dollar. This is one of those. Oh, sorry, that's a silver. So here with silver, you can see it's performed earlier between July 23rd, and it's done okay. 4 hour time frame. Let's look at 6 month time period. Boom, it's been performing pretty good. How does that compare against gold and US dollar? Um, you can see right there, gold 0.5%, And silver in silver in US dollar, it's up 8.7%. Huge difference. So right now, silver is definitely outperforming gold. So again, as a comparison between the US dollar, gold and US dollar, right here, 1.1, gold and US dollar 0.58. So it's not quite double just between the same currency, but the huge difference if you hold it in Australian dollar. That's the difference. Big things to know if you want to make real good money. Let's look at the WTI again. WTI CO, and that's Oanda. Big run up there from $68 to 81. Big sol. That's really dependent upon China, which has had a really solid run up. Let me just see if I could see the CN. Let's see. The China's got to be in here somewhere. There you go. This might be it. So it's a China A50 index. Uh, CN. I don't know why it's not loading up. Anyways, but there should be some correlation between oil, West Tech, oil, and China as well. The markets. All right, so there's that. Um, Here's some surprises. Here is the rand. You know, when you have a crazy market, when uh, the exotics like Turkish lira is performing, and also included with that is the rand. So this is the British pound against the rand. Boom, you can see it's kind of performing, gone flat, starting to perform again. Um, and again, this is why I put it as a maybe. It's these trends I like to see to confirm it. And again, look how it's performed during that banking crisis. It's done very well. Another one, this will be all similar as the Australian dollar. So in this case, it's silver in Canada as well. Slight trend there, kind of gone flat. But again, this is after a U.S. credit worthiness cut. So if I compare that, this will be similar as well. XAG, that's silver in euro this time. It'll be usually uh, similar patterns you can see here. But the point when it comes to silver is you want to hold silver over gold right now, as I showed that silver seems to be outperforming almost double than gold and US dollar. Okay, Australian 200 again getting killed here as well. Let me pull up a 4 hour chart here. It's getting killed there. Last one is the euro Danish krone. Boom. Just range bound. Nothing much to talk about there. Anyways, we'll leave it at that. But that's what you get with the Oanda outlook on the Forex and CFDs. We'll leave it at that. Thanks for watching. Have a good day.